an Independence Day week rally and uh, a new estimate for USDA's supply and demand with Jerry Gidel right here on Connected Farmer, your channel to keep you up to date with the latest trends in agriculture and livestock. So, Jerry, we had this rally for both corn and soybeans this week after the Independence Day holiday in the US. So, what do you think is behind this rally? It's really unusual to have this kind of rally after a holiday on Friday.
Yeah, you're kind of right on that. I think the part of it is the combination of being cautious ahead of the holiday, and that then there was some rain forecast, and there was some rains in the Western Corn Belt occurring, uh, uh, but it didn't turn around and really progress all that much in the Eastern Corn Belt. It's been really interesting this year, where the high pressure zones have really kind of stayed over the Eastern Corn Belt and kind of prevented rains about moving along, and it's really got too much rain, as we kind of knew, Northwest Iowa, South Dakota, and Southwest Minnesota, where they had a flooding here about 2 or 3 weeks ago, and really damaged things dramatically there, dams and everything else. So it turns out that that, and I think that to some extent, we were. The forecast after this year's July 4th situation for the coming week or 2 weeks is for above normal temps and limited moisture, and that on corn and soybeans, which is to some extent potentially a damaging thing for corn pollination and the right combination. And on the wheat side, that's really was some of the ones that was strongest this last week or so, even going into the report and afterwards. I think that the market was sensing that the U.S. winter wheat harvest had really kind of progressed far enough along that there really was going to be limited harvest pressure. Once you see the U.S. wheat harvest move basically substantially past Kansas, which this week was reported 80% done. Oklahoma's 100% done. We were moving, I think Colorado was like 30%, 15, 20% in Nebraska. Basically, uh, once you get past Nebraska, particularly, there's not much until you get all the way up to the Montana stuff. So, at this point, at least, I think that's the other feature that came in here in the wheat. To some extent, there has been some buyers out there in the cash wheats too. So I think that's the other factor in here that's helped us out. But definitely a very positive day there on July 5th.
Now, for corn in the heart of the Corn Belt, specifically in the state of Illinois, we are seeing that the crop has progressed faster than last year.
Right, right. Well, I think last year it was during most of the month of June, it was really starving for some moisture, and that we had quite a deluge last year on 4th of July weekend here. Doesn't we at this point isn't the expectations this year by any means, but that's the progress numbers are definitely slightly better there. The one that really kicked this thing up surprisingly this year versus the last the kind of the average at this point was was Kansas and Missouri. Both of them are in their 30% pollination levels, and that definitely is above normal, which is an interesting twist because the Midwest kind of looks at its temperatures and doesn't really pay attention to those two. And there's quite a little corn in both those states, particularly Kansas. They got dinged last year on their corn crop for, and then it turns up that it's a big uh, feeding state for cattle, in the western part of Kansas, and so our seedings in Kansas and that jumped up this year. Surprisingly, we had this big decline over 4 million in the U.S. plantings and that, but Kansas actually kind of bucked the trend and went up. I think Missouri was it was down slightly, wasn't bad, wasn't up, but in general, those two states were the big feature that jumped our seasonal pollination numbers from this year to, versus last year. And it's interesting world out there. Uh, those are areas that don't have the biggest production yield opportunities, but they're highly important to the feeding industry and uh, with lots of feeder pigs and out in Missouri and all the big cattle operations in western Kansas.
Now, for your own estimates for next week's supply and demand report, you are expecting a higher wheat output. Why is that?
Well, the interesting twist that I'm optimistic about the total, but I think a lot of it's going to come from spring and durum wheat. We had a big jump of, geez, 300,000 acres from like 1.7 up to 2 million acres on durum, and we're up 150,000 acres or so in spring wheat, but yields and everything like that. I'm actually looking at numbers here year over year, closer to the 50 million increase, but actually versus the USDA, which it's kind of an interesting scenario. They conclude that kind of a general estimate for both those two crops in their total wheat number, and they've been looking for about a number that's already included 30 million, 20 to 30 million that. So my overall number for wheat is up 33 million. Now the twist of that is that on the hard red, or excuse me, on the winter wheat side of the things, and that I'm not the twist of adding more acres, and they did this interestingly enough. They took added to 200,000 in Oklahoma, 200,000 in Texas, 150,000 in Kansas, maybe 50,000 in Nebraska, and that and. I sense that that's in some of the western areas that they went ahead and harvested wheat when maybe they wouldn't have in previous years, and that. So I'm anticipating some of those yields in those southwest areas to go down with slightly higher harvested areas, and so I'm looking for hard red to be up 20. I'm also anticipating the opposite effect in our soft red wheat productions because two of the main states, Illinois and Indiana, they took out I think over 100,000 in harvested areas in Illinois and over 100, near 100,000 there in Indiana, and so. Despite maybe some uh, solid soft red numbers on yields, we're losing acres. So I'm looking for 13 to 15 million less in soft red. So they kind of compensate for each other. And all of a sudden we just have, I'm just looking for 3 million up. So my total increase in wheat versus last month is up 33 million. I know there's a lot of people out there with higher numbers than that on overall wheat production for July versus June. But I think these acreage situations and the switches we've got, because don't forget, Illinois and Indiana are places that you can have 70 to 80, 85 bushel wheat. Kansas and Oklahoma you're looking in the 40 bushel situation. So that's a big difference if you take, you don't have to have a big decline in Illinois and Indiana to compensate for what might be going on in other places in the world of wheat. But overall, this wheat number this time is going to be up a little bit, but I don't think it's outrageous enough to maybe stop this post-harvest rally that we've, I think, look like we started. The biggest thing is that there's more reports about Europe having difficulties this week, having some of their lowest yields in a while because of excessive rains. We've had, of course, the issues in both the Black Sea area, both in Ukraine and in Russia. So, in general, I kind of feel like the wheat market is kind of looking for a little bit more post-harvest rally. I don't know that I would say that it's going to go crazy here, but between now and August or mid-August type situation, there could be some more upside here depending on what happens around the world from there. But wheat definitely had a very positive week this week. I think it was over 40 cents higher.
Now, what are your prospects for both corn and soybeans?
Well, looking at the upcoming season here, I've been continuing being defensive about the USDA's 181 bushel yields on corn and the 52 bushel beans numbers. We haven't had any numbers close to those. And they keep projecting the same outlook for the last 4 or 5 years in that. But the craziness is I doubt very seriously USDA is going to change their yield numbers. They're just going to adjust things to recent numbers that we had on the acreage report on June 30th. So with that expanded harvested acres over 135 1.35 billion 1.35 million acres. We'll get to that straightly, and that we're likely going to have this number on production this time around to go up around 240 million, which is going to end up adding to our carryover stock expectations. And that I don't, generally speaking, I think the USDA is going to keep things pretty well on target with their previous numbers here for demand. And that the interesting twist I think that might happen in the corn market this time around is that our sales are definitely strong at this point, and looks like that they're going to potentially see a higher numbers there. Originally, I was kind of anticipating that maybe 50 to 75 million, but I'm kind of tempering my attitude, looking at the shipments at this point. So I'm looking for only about a 20 or 30 million increase. So that of old crop exports and that. But the one thing that I was pondering yesterday all day, and that was the U.S. ethanol demand. Somehow or other, the amount of ethanol we have produced seems to be very efficient this year, with the USDA bringing down, not utilizing as many bushels in the usage factors on it, which has been surprising. Right now, I guess cautious that the USDA is going to maybe even slip back our ethanol demand for old crop by 50 million. So even with a slight 30 million increase in exports on that, we're going to end up with a slightly higher old crop carryover. And so the interesting thing is that USDA's numbers, when you're at 2.1 last month and you go to 2.33 this month, they're both large. And I don't know that that's in itself. I think that's what prompted our immediate reaction after the stocks and acreage report. And since then, we've been bouncing back. So I kind of feel like that that ending stocks number is pretty well into the market, and it's a big number already. We already went to $4 December corn or below, and so I don't know that that's going to make a big difference to the price activity. We're going to be watching what the impacts of pollination might be. Quickly looking at the soybeans here for the numbers for this coming week. Export sales are also very strong on beans, but same situation here on shipments. They've been dragging a little bit, so I'm going to leave my export estimate from the USDA unchanged. One thing I am going to do, though, is we had another really strong May U.S. soybean crush. Looks like we're figuring out how to get the soybean oil exported, so we're not getting any issues there since we've decided that we're going to use cooking oil instead of new soybean oil in our renewable diesel, and that. So I'm kind of anticipating that number to go back up to 10 million. The one twist that I kind of seen looking at our imports on beans is it looks like we're not going to end up importing 25 million, only 10 million. So that's a minor 10 million less supplies, and you got 10 million higher crush. So we're going to maybe take down old crops stocks down to 330. And then we talking about the reduction we had in the acreage report on things, and that looks like that's going to potentially, even with a 52 bushel yield, which, as I mentioned before, I'm not really excited about, but that's the number the USDA is probably going to use, and that means a 20 million decline. So overall, we could see a 40 million reduction in the USDA's 2024-25 carryover stock. Now, that means that you're going from 455 million down to 415. Now, those are still very big numbers on carryover stock. But if we're talking about the yield on the U.S. is only 51, so all of a sudden you take 85 off of that, and all of a sudden you're back round at this year's kind of carryover stock in the low 300s here, 300 million. So things can change quickly here if the weather is potentially nasty as has been. Climate change and everything else. I think for this week we finally got maybe a new record, or at least tied the record for Las Vegas temperatures at I think just under 120 degrees Fahrenheit on a day, and so those kinds of scenarios move eastward. Now it won't be 120 in St. Louis, but it's a situation that definitely climate change and the issues involved in it could definitely still have a major impact on our U.S. yields this summer. So we have to keep that in mind. And I think that's part of the reason why this market has had limited decreases since the USDA's acreages and stocks reports were reported here on June 30th. I think they're all looking at the issues about what our growing season will be, and that's going to be highly important to what our prices might be for the balance of the summer. You and I are going to take another look at this Central Illinois crop again in the first part of August, and so we'll be out there seeing what impact we have or haven't had on our potential corn and soybean crops when we get out there and check out the fields in and around Bloomington, Illinois.
All right. Thank you very much, Jerry. We'll see you next week.
You bet. Take care, sir, and we'll take another bite at it next week.
All right. Bye.